Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to income statement account order. Time to take a stance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that information into the blue area on the right-hand side. We're basically getting better at constructing our income statement, that one of the major fundamental statements of our financial statements, the timing statement here. We're going to get used to the structure or the ordering of the accounts on the income statement now by taking a scrambling ordering over here and putting them into this standard order. So once we start to visualize the income statement, we want to be able to start to visualize it in this order, in this format. So thinking about the income statement, before you even look at the scrambling accounts, you want to start thinking, okay, what would the income statement start with? And that would be revenue or sales, right? Top line of the income statement, revenue or sales. So that should start to be automatic. It may be different named, again, by what kind of company it is. So if it's a service company, it might be service revenue or fees revenue or, revenue. They might just call it revenue. They might call it income. They might call it sales. But it's a revenue type of account, which we're simply going to call revenue or sales. So and to pull these over, I'm going to say equals, keeping with our practice in Excel, even using formats and to pull these over as well. So I'm going to say revenue. Now, obviously, if you were to work this in practice, then in a problem and try to do this as fast as possible, you'd want to highlight or cross out or mark in some way the ones you have done. You could do that in Excel by basically making these a different color. So I'm going to right click on this and make it like a different color. So I'm going to make it a color down here. And let's make it yellow, means we're done with it. Let's make it yellow. That's traditional highlighting color. So then we usually have the cost of goods sold, which is the expense related to consuming inventory in order to generate revenue. So where's the cost of goods sold? And notice I'm trying to think about it over here before I even look for the accounts on the left. So I'm going to say, all right, that's standard. Next, we have the revenue minus the cost of goods sold, which is a subcategory, a stop along the way to get down to the net income. That's going to be the the gross profit. So we're looking for gross profit now. The gross profit, there it is. Make that one yellow. I'm going to right click on it, making it yellow. So now it gets a little bit more difficult because now we're looking for basically expenses. So we're looking for other types of expenses. And they might even break out a subcategory called like other operating expenses, like a subcategory with a colon to break everything out into it. Or we might just simply go right into the other expenses that would be involved. So if I go through here, we've got the other expenses, including the, let's see, interest expense. This is going to be might be down below because interest expense might be after the operating income. Depreciation will typically be included in there. So preferred stock, earnings, and then selling and admin. So we got selling and admin and depreciation. Now, typically, I'm going to put selling and admin will typically go first. So I'm going to say equals the selling and admin. And because it's probably going to be larger an expense. So if I was to think about an income statement, I would think that you'd have selling and admin and then the depreciation. If it was simply an alphabetical order, then you might see the depreciation first. So the ordering of these two accounts, could be the opposite. So if you put this in a reverse order, that would be an understandable kind of mistake. Or, it might not even be a mistake. You might see it in a reversed order. So we've got the selling and admin and then the depreciation. So then if we took the gross profit, and those are the two other expenses to get to the operating profit. So I'm going to say we're going to get to the operating profit here. Operating profit, I'm going to make that yellow. So that would be calculated as the gross profit minus the selling and admin minus the depreciation gets us to the operating profit. Then we have the interest expense, which I'm going to break out below the operating profit. Why? Because interest expense is related to financing. So we can think about it as something like it's not part of normal operations. If it wasn't for the fact that we had to get a loan financing, then it wouldn't be an expense up top. So it's nice, oftentimes in a multiple step income statement, we will break out another step, breaking out the interest income into another subcategory because it's not part of normal operations. It's a financing type of activity. So I'm going to say then we're going to pick up the interest expense. So interest expense, but note, bottom line is if we had a single step income statement, we could break this down to basically revenue minus the expenses, cost of goods sold, selling, depreciation, interest income to get to, in essence, the bottom line here. So then we're going to have the earnings before taxes. Now, taxes is always something that we break out at the bottom because we have to calculate the taxes on the earnings. Also, taxes is it's kind of a confusing thing because the tax is going to change as earnings changes. So we want to calculate that basically separately once again. So I'm going to say this is going to, and this is a multi-step income statement, very steps along the way. We're looking for the earnings before taxes. So that's going to be this item, earnings before taxes. I'm going to make this yellow, right-clicking on it, making that item yellow. Earnings before taxes being the operating profit minus the interest expense to give us basically kind of like our earnings or our net income in essence before we apply the taxes. Then we're going to calculate the taxes based on that number. So this is going to be equal to the taxes, which is basically another expense here, another expense along the way. Right-clicking on that expense and making it yellow. So then we're going to have our earnings after taxes, which is kind of like our net income number now. So we're going to say earnings after taxes is here. And then I'm going to make that yellow. Right-click on that. We're going to make that yellow. So then this is basically the income statement. That's going to be our bottom line. You can think of it basically as net income, right? We got the top line being revenue. Bottom line after this whole thing is net income. You can get to net income without these subcategories with a single step income statement, which would simply be revenue minus the cost of goods sold, selling, depreciation, interest, and the taxes. I think I got them all. Notice these are all just subtotal stops along the way to get to the number. This is a stop along the way. Gross profit and the operating profit, earnings before the taxes, and then you got the earnings after taxes, basically the net income. Okay, so next we're going to do some items related to the calculation of the shares outstanding and earnings per share. So you can kind of think about this as the bottom line of the income statement. The next couple items are kind of like some added calculations that are going to be dealing with the stocks and the dividends and the shares outstanding and the earnings per share that we could tack on to basically, the income statement using that same kind of data, that same type of format. But I would think about this as the bottom line of the income statement, the net income or the earnings after the taxes. So next we're going to have the preferred stock dividends, if there are any preferred stock dividends, right? There may not be always preferred stock dividends, but if there's preferred stock dividends, we'll pick that up. I'm going to right-click on that. I'm going to make that yellow. Then we've got earnings available. So here's the earnings. If there's any preferred stock dividends, they typically get paid first. So preferred stock gets paid first out of the earnings, but they don't have a voting share typically. And then the rest will then go to the earnings available for the common stock. Earnings available for the common stock, that would be the earnings after the taxes minus the preferred stock, gives us the earnings, basically the portion of the net income that would be applicable to the common stockholders, those people we typically think of as the owners of the corporation. We don't typically think of the preferred stockholders as owners because they don't typically have voting rights, whereas the common stockholders do. They have a preference to get paid first in terms of the dividends that go out. That's why they call preferred. But the common stockholders are typically thought of as the owner because they are the ones that typically have the voting power. So then we're going to say that this is going to be yellow. And then we can calculate, we can get the shares outstanding here, and I'm going to make that yellow, and that's what we could then use to calculate the earnings per share. Earnings per share, which would be the earnings available to the common stockholders divided by the shares outstanding, could be the earnings per share. So again, you would basically think of this as the entire income statement typically, right? This is showing you what the actual performance was of the company. And these items could be tacked onto the income statement, giving added information, not just about the performance of the company, but related to the owners of the company, including the preferred stock dividends, the amount available for the common stockholders, and then the earnings per share can then be calculated as part of basically the income statement. But when you hear top line income statement revenue, bottom line income statement, that's going to be the net income or the earnings after taxes.